Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this is a chart of the December wheat. If you remember yesterday, we were trying to buy it. Well, we actually bought it at 580, and we put a stop at 5 cents away at 575, and it got to 575 and 1/4, and we did not get stopped out. I had two people ask me, how is that possible? Folks, they do not share these stop prices with anybody. They don't have to. When I started trading commodities way back in the 60s, everything was done with ticker tapes and stuff like that. Sure, there was some games played, but not very much. Most of it was pretty honest. But since we got into the digital field, which was started in the 90s, they don't need to, because stop and think, we had about 23 commodities that we traded back in the 60s and 70s. Then they started to add. With all the different options and stuff, there's 250,000 things you can do. Can you believe that? I saw that figure. I said, that can't be possible. But anyway, when you put your stop in, just put it in. And if you get stopped out, it's no deal. We bought corn. Oh, man. What? I don't know what to do now. Just a minute. Let me see if I can get up here. Mine seems to be working. I don't understand. Mine's working. I don't know what to do. Man, all my frustrations in this business comes from this stuff. I really don't know what to do. So you better call me if you can hear me. I don't even know what to do now. I say, what should I do now? Oh my God. Okay. I don't know. Can you hear me? Hello? Hello? Can you hear me? Okay, well, this is good. All right, let's try something different then. Okay, folks. Glad you're okay. Anyway, we're talking about this. Anyway, that's what we're paying attention to. Now, there's one market that is very, very important to watch right now, folks. Okay, now you might find this hard to believe, but I'm going to bring this up because I think this is the biggest trap that they played on anybody in a long time. This is the Russell. Now, they take turns running these things, as you know. There was the low yesterday. You just put this in, you'll be able to see it. There was your low yesterday. There was your pullback this morning. That was your 382. This is what we want to focus on, folks. I'm going to go up here and put on the daily chart, and you're going to see what we've just done here in the Russell. Okay? Now, the Russell has just taken out the highs of September, which was at 2305. We made a high today of 2306.80. We're now 7 points under that. I do not believe I'd be buying that breakout if I were you folks, for a lot of different reasons. Those of you that follow some of these numbers, you might want to pay attention to that. But that's what's happened to it. Looking at it on a very, very short-term basis, you'll see we went up here. Now we started, to roll over at this level. So why weren't people willing to buy that breakout? I'll have to answer that question at another time. Anyway, let's move on. Let's talk about a couple of trades that we were watching for today. There's one very interesting one that we should be watching. In fact, I just posted one on the E-mini S&P. I know it got filled at 80, but I don't know what it's doing now. Hold on just a second. Shucks. Hold on. Window, tile, vertical. I'll get this back up and hopefully get this thing running. It's like watching two monkeys playing with the coconut over here in Tucson. There was our sale was right. There was your 88 was your number, 580. Stop would have been right above here if you'd have done that trade. That's simple ABCD. That's what I do. Nothing's too exciting with what I do. But something big has happened today, folks, in one of these markets that we've been watching for quite some time. Let's get over to the crude oil. All right, here's the daily chart on crude. Okay, now we have the big run-up. That run-up, stopped right where it should have, ABCD. There was your 78% level. And now what we did is we had an ABCD pattern forming right here. Now, I want you to see something because I think this is what the important part is when you're watching markets over a 3 to 5 day period to try to find a good spot. First, all you want to do is you want to see what these, now you've got a higher bottoms in here, right? So the first thing you want to do is check your bottom from your last level to your top, and that comes in right here between the 618 and the 786. If you take it from the low that we made on September 9th, you put that one in, and it comes in nearly at the same time, right at this level. So all we have to do now is to focus on the ABCD. So what we'll do now is we'll go down to an hourly chart so we can see it really clearly with a little microscope, and that's what we're going to be watching here right now. There's that ABCD that we're following right here. It takes out the previous low here of yesterday by 10 cents. But look at this. It's perfect. A, B, C, D, right on the money. And look at the nice rally that we've had so far. This is telling us we've had almost $1 a barrel. So this could be a really significant bottom here in crude oil today, for the reason is you took out the previous day's low and it didn't do anything. Plus you completed the big ABCDs that are down there, and now we're moving. Now, one of the things that we always talk about, let's just draw this in so you folks can see it here. Hope this makes sense for you. There's your ABCD. There it is right there. You take out that low. Look at that. And boom, bang, bing, and that's it. Now, what do we always talk about? Yes, boys and girls, we talk about the 382. So we'll take a 4-minute chart here and see if we got a 382 on this. Wouldn't that be nice if something like that happened? Let's just take a look. There was our low right here, and there's our run up to right there. Oh, well, how much did we miss it by? We missed it by 4 cents, folks. The low was 23. Oh, 2 cents. This was at 21, was a 382. This low here was at 23, so we missed it by 2 cents. So that one you missed. Nothing else you can do about that, unless you shade it by 3 cents, which I certainly didn't do that. Okay, now let's move on to something that people are always talking about, which are our Treasury bonds here. 1 second here. And I want to get this up here. Hold on 1 second. I'll try to do this. These are the bonds. Let's put the hourly up so we can see legitimately what we're watching. Remember, we were watching all of these ABCDs forming all the way down. Of course, we had the last...
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we've been asked to take a look at the Treasury bond market. This is where we were Friday. We made a major bottom down here. Let's try that again, Larry. On Monday, right there was a major bottom. As you look at that, there was a 3-drive to a bottom pattern. There's drive 1, drive 2, drive 3, lining up perfectly. Now we're having a rally here, folks. We've not had a 382 retracement in this for 2 days. This is just a rally of a market that is incredibly oversold. Don't think that this is the new bull market in Treasury bonds, folks. Well, shut up, Larry. It might be. I don't know, but I certainly don't think so, because looking at the daily chart, this has got skull and crossbones written all over it. And also, as you can see here, I would be watching if it's going to be a really big move, which I'm not sure that it is. You watch for a little 382 retracement. So all we're going to do now is we're going to spread this out a little bit and bring it down to see where we are from where we came from. Now, this is the secondary high. Remember, our big high was back here at 27. So that's the one you have to look at. So we're just going to come here right now and move it over just a little bit, and we are going to take that out, make it just a tiny bit bigger so we can all see it together. And this is what I try to do every day. So we go from our high right up here to our low right down here, and we're looking for a 382 to come in right about here at 121.26. The high so far today has been 121.23. Now, maybe it doesn't make the 382, I don't know, but that's all that is, folks. This little market move like this has taken 3 days, okay? Monday, Tuesday, Wednesday, okay? It's no different than this little 382 back here. That's all it is, in my opinion. The interest rates are going to be going higher, in my opinion, but again, we all know what opinions are, and everyone usually has one. Now, let's take a quick look over here at another one that looked so beautiful this morning. We were talking about this here, and just give me a second. We'll get this up here to take a look at it. There it is. This is a beautiful pattern over the last couple days in the soybean oil. It's an hourly chart going over the last several weeks. As you can see, there's your head and shoulders pattern, mathematically done just like they do at Andrew Lowe, the folks in Massachusetts Institute of Technology. The left shoulder, you see, the right shoulder lower than the left shoulder, confirming that it's bearish. The distance between the left head and the left shoulder and the head to the right shoulder is equal. And now you've come down, and what did you do? You rally right up to the 382 over this number right back here, and 50% of that number right here, and that sale at 43 already netted you $700 if you were looking at that on a trade that we were sort of watching. Had nothing to do with anything. In fact, as soybean oil, it's one of my favorite things to trade. And if you look at this just on an ABCD standpoint, there's your AB leg. There's your CD leg coming in right there. That move from 71.40 up here, that's a $900 move. That's equivalent to 20 handles, 18 handles in the S&P. So it has a margin of 1/10 of the S&P margin. So that's something you might want to consider because it's a big, big difference. Not 1/10, 20%. It has 20%. The margin on this like 2,300, and on the S&P, it's I think it's around 14,000 now if they haven't kept rising it and stuff. So those are some of the things that we're paying attention to. Okay, now moving back here to this Russell. This is what my game plan would be, and this is what I am going to be using as a game plan. Because there was no buying up here when it busted out, okay, we've got 4 hours of trading left in the day. I would like, in order for me to really be comfortable, because we've got a long time to go. This thing could go blasting through here and close up at 23.20 and be the biggest breakout of the whole world. But looking at this on the long-term weekly, you see that made a high back in November of 2021. Stop and think where the NASDAQ and those stocks, other stocks went. The Russell didn't do anything. Well, why all of a sudden it's going to be a home run now? Well, maybe it could, but we'll have to wait and see. But we're back to watch the breakout level right here was, wait a minute. There was a 23.20 here. We took out this one right here. We could easily take out 23.20. So it's still early in the day, but if we, with 4 hours to go, if we do get a good break in the Russell and then rallies back to the 382 right on the close, then I would be able to do it. Other than that, I'm not going to mess with it because these guys have a lot of power in there, and I don't want to mess with that power. You see that pullback right here? This was the pullback yesterday, right at the 382 of this whole move right there. There's your low, there's your 382 pullback, and boom. What does that tell you? There's a possibility here, and a good possibility because we've already taken out the high. We could easily make it up here to 24.25. Let's just take a look at that on the longer term weekly, and that would be a possible double top. 24.25. You're talking about 140 handles. That's $7,000 in the Russell, folks. If that happens, there's probably going to be turns around in all the Dow Jones and the Russell and the NASDAQ and S&P and everything. So that's my game plan. But I'm watching for a potential up in here because we took out that, just like it took out this one on the weekly and didn't go anywhere. You take out those highs, why wasn't there buying in there? You'd think that there would be. But in fact, at this particular time, there wasn't, so not to worry. All right, a few things here just on a technical note, and believe me, this is all technical stuff, folks. I don't do much other than that. Here's the NASDAQ from our high we made yesterday. You'll notice that on the pullback here from yesterday, we came down and we almost made the 382. We didn't quite do it. Now we've made a lower low, so you must recalculate. Oh, dear, what did I do now? Hold on just a second, folks. We'll have to get this up here. And I will cover Nvidia in just a second. Someone's asked me about that stock, and I will certainly do that if I don't lose everything. So here's the NASDAQ again. And so we have a new low, so we must recalculate the 382 off of that. And there's your high. So your new 382 has not been reached yet. It's right here. So you make that lower low. So the new 382 is here, up about another 80 handles. So it could easily do that and still not get above the 382. Okay, now the S&P, it has gone above the 382. I've got to correct this 1 second here. And we'll just do a cascade so I can pull them up one at a time. And here's the S&P. There's where we were, that 3-minute chart we were looking at up in here. Okay, now all we're going to do now with the S&P is move over to an hourly to see where we are. Okay, there's the move down yesterday. You see we had a pretty good move to the downside. So the first thing you want to do is calculate to see what the 382 is going to be. And as you can see, we went up to it and we backed off a little bit, and we're coming back again right now. All we did, which I just showed you on that picture, all we did on that was do the old AB equals CD routine. There's your A leg right here. There's your B leg right here, your C leg right in there, and it goes quite a bit higher. And that's what I did this for, was on that shorter term time frame to show you what it looked like, on the shorter one, just so you can see. There's the low. I'm putting them all in so you can see them together. So we backed off just a little bit. Now, if we start closing above 58.90 today, then anything could happen, and it usually does. So that's what we're watching. So stay tuned. We've got some more charts to look at. Hopefully we'll find a emerald in the land of gravel and rocks. So we'll be right back, folks.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, this is the British pound on just looking over the last few days. We had the big break here. This was also a 382 pattern right here. Had the big break, another 382. Folks, this has got real problems. If you look at this on the weekly basis, there's where our sell was right up there at 134.10. We're down 6 handles. Let's try that again. We're down 5 handles in this, so it looks like it's going to be a good winner, but we put our stop in here right above 132 to lock in at least $1,000, but there's a possibility it could go. Look what the last time that happened. You see, you had a big move like that, so that's what we're saying is that you could easily get down to this level right here. That's a huge move. Now, the only way you can handle that, folks, is don't watch the darn thing. Take it off your machine and don't look at it. Let the market look at it, because one of the problems that we have with these quote systems and all that stuff, it tells you to what your equity is, within 10 cents every second. I used to have to wait 24 hours to find what my equity was and hoping I didn't have out trades. So that you're in a different environment now, and that's not a good thing, because you focus on the money, it's going to mess you up. Boy, look how much money I've made. Wow. That's pretty good. The only one that really counts is Larry Williams' calculator evaluation. In other words, when you pick up your calculator to figure out how much money you're making, before you do that, hit the sell button or the buy button and liquidate your position, because what you've done is you hit the maximum read or really close to it. So that's what you don't want to do when you're doing something like that. Now, we've been asked to look at Nvidia, and also, believe it or not, even Apple. First, we'll look at Nvidia. We'll get it up here. I know it got hit yesterday. I hadn't seen it yesterday. When I looked at it early this morning, I sure did. Hold on a second. Here's where we are. There's where we were right now in Nvidia. We're making a 61% retracement right here. And that's also, you can see, it looks like it's got some smaller ABCD patterns in here. We'll just do them one at a time, because this is just really small. There's your AB pattern right there. That's to that one, and then you've got another one right behind that. And if you put that one in right here, that takes us to just about where we are right now. So this should be some pretty good resistance here in Nvidia here at this 135. Remember, this is delayed, folks, so I don't know where it is. That's it. So let's get that out of the way. We'll take a quick look at get this Apple in there also. And there's where we are. I have to get a new phone, and everybody's telling me to buy Apple. But boy, I have nothing against Apple, folks. The problem is that the higher the tech stuff, the more difficult it is for me. Now, we've had a pretty big break here yesterday and today in Apple. You can see it. I don't know what the news was, but it's come down quite a bit. In fact, it left this sort of island, but that's not unusual. All we're seeing right now on this mini is just a little ABCD here in Apple, so I don't see very much to do here with the Apple. So we'll get rid of that and move this around like this. And hold on one second. I want to do one other thing. And I have another currency that someone's asked about, so I want to do it right now. This is the Australian dollar. This is one that we looked at as potential, but it was no good. And we pointed that out to the folks immediately. This is where we were watching it here. This was the long-term daily right in here. We said it had some potential here at 167 because of these. There was no head and shoulders. You can see this shoulder here lower than that, so that's no good. We had a nice rally here, but what we did is we just moved our stop to the point where we wouldn't risk anything at all, and now you can see it just continues to go down. In fact, the dollar is strong, folks. There's nothing else people can say about it, but it is. This is where we are here. Let me put these defaults in so you can see what the chart really looks like. There's where we are. Okay, now you can see just one after another. ABCD's coming in here, and this is the one we were focusing on right there. That ABCD right there. We thought that could possibly hold, and when that didn't, that said get out of Dodge. So basically lost a very, very small amount, possibly even break even, and all you're seeing now is some more ABCDs coming down in the Australian dollar. It's the U.S. dollar is the one that's strong, and we'll look at that next. And we'll get this one out of the way, and then we'll bring up the U.S. dollar and show you, like we've been trying to over the last few days, it does look pretty good. And there it is. It's continued to go higher. Remember, way back down here, back in here when nobody liked it, way, way back here. Remember back here on the long-term weekly, everybody said the death of the dollar? Well, the dollar didn't die. took out these lows, didn't do anything. And the reason why this was so very important, folks, I'll do it again just for memory. You look at the weekly chart. There was your big ABCD on the weekly, right on the money, honey. Didn't take this one out. Took this one out. Took out the low of 23. And took it out again right here from December, Christmas time, and then it's had the big move. And this not only is that, folks, look at this. Look how it's coming out of here. It's coming out of here like it did here. Look at that. This is 1, 2, 3, 4, 5, 6 days. It moved that much. Let's just, it's a weekly. This is weekly. Let's see, the first week, 6 weeks, it went to right there. Let's see if we're going to come up to that right now. Just running up 6 weeks without a correction would take you up to $1.04. So it's not done yet. And looking at this on the daily, you can see there's just no I meant to go to a smaller time frame. There's very little here to look. Now remember, what we watch for is the 382. Now we have the big run up here that you don't see any 382s except right here at the beginning. Other than that, there's virtually very little there. You have to come in and watch these from these lower lows right here from the 8th. You watch for the first one that you can find where the market runs up really strong and then backs off. There's your 382. It goes to the 50%. Then it makes another new high, so you have to recalculate. This is what the folks at Elliott Wave miss this stuff because it's a dynamic market. And there's where it tells you 382, 382, 382, another 382 right in here, probably another 382 right in here. And this is strong trending markets. The reason why I keep talking about there it is again. Folks, someday, not in my lifetime, but someday the stock market is going to have what we call bearish tendencies, whatever that means. And so what we have to watch is if it does happen, then you're going to say, uh-oh, the structure of the market has changed and, Billy Ray Valentine is in the house. That's what you'll have to look at. But as of now, we're close, but we'll have to wait and see. The one to watch today, in my opinion, is that Russell, because if that Russell can close below, say, 20 points off the high at, say, 2380, something like that, then that would say, maybe there's something not going on with this that looks good, because there's no breakout. With a big breakout like that, one would have thought you would have had a heck of a move, going in that direction, but that has not happened. As of yet. Okay? So I hope that makes sense. All right, let's move on here to the gold market. Today in the gold market, I really, really believed we had a shot at 27.35, folks. Let me get this. We'll be right back. We'll be right back with you, folks. And we'll talk about this gold market right after we get back from the old paying a few bills. Okay, here's where we are.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this is the gold market from back on September 3rd when we had our first high in the stock market. Remember that key date? That was the anniversary of the high in the market in 1929, the stock market. We went up to this level right here. That was a big number, if you remember, 2705 in the long-term weeklies. I believe I have it up still have it sitting there. There it is right there, 25. That was this big move here. This is what we've done here. So what we're going to do now is we're going to reanalyze it to see where we are right now. We're going to go to that 4-hour chart. We already know that that's the important number, correct? You can see it through this again, doing the same thing. This is on the 4-hour, but it'll also tell you that you're pretty close. There's your high right here. You pull back. You'll notice that that pulls back just a tiny bit below the 382, just by a hair, goes up and almost makes the exact target. And then what it does is it makes a beautiful ABCD from the low right here coming in down $80. Hits the wrong one, but close enough. Comes in almost at 382. There's 4.4. So the market's still bullish. As you can see here, you'll be looking at it right here. Fact is, it went a little bit below the number. We're looking at 22. It got to 19. But here's what I was watching for today. I think, given this action, folks, gold's going to go higher. We'll look at silver in just a second, but it looks higher. The reason why, the pullbacks. After we have the low, the market rallies up, and what does it do? It pulls back. Where to? Just between the 382. It doesn't stay at the 382 for more than a few minutes, and now it's still running. So I was watching this today to see if we were going to make a new high, because I was just looking at this over the last few days. There's yesterday and today. There's today's action. So I saw that we went up above this. I said, okay, it pulls back a little bit, and all we're going to do now is blow this up to see what the pullback was. There's your low right here. There's your pullback. Stops, misses it by a $0.50 on the 3.2. So that tells us that we had a chance to go up and make a new high by just a little bit. But here's what I was also thinking. Now, there's a lot of different things you can think about, but we have this bigger move here that could take us up to a new high in the gold without any trouble. There's your number there, and that's going to take us up to right around 27.23. There's your one. So this is going to take this high out at 27.05 or 27.08 and get up to this level right here. We're going to put this in because the next time we're on the air, we might have hit that. And occasionally when we get these right, we want to bring them to your attention. So we want to watch that real closely, the 1.618. Now that's, folks, you're only talking $30 in gold. Are you kidding me? They made on the downside here, it made more than $30. So you can tell you that that's possibility to making that is not hard. Now, we'll switch over to the little friend of the Lone Ranger, Clayton Moore, and that's the silver market. So we'll get silver up here. And there's the December silver. Get the hourly chart up. It's also had one today. This was silver. You can see it's much weaker. Gold is almost making a double top. All we did here was to make this high right here. And we were watching it closely today because there is an ABCD pattern. Remember, there's your AB, there's your CD leg. It comes in right there. And the high of the day was 32.73. And the high, 32.37. And the high was 32.35, folks. 2 cents different than what it should have been. And look at the pullback. Here again, it sells off quite a bit, but it's doing nothing but acting bullish. There's your low. Pullback stops right near the 382. Nothing bearish about that, folks. So that's why it looks got a chance to move to the upside. So those are the ones we're sort of looking at right now. We'll get this out of the way, and we'll keep a close eye on a couple of these things right here. Hold on one second. Here we got to watch this S&P because it's gone back up to that level again. This is where it wouldn't even have made your first profit objective up here. See, there's your 50% retracement on the day on the move, folks, right here at 51.81. So you sold it at 80. At one time, you had 7 points in it. You could put your stop at break even if you want. My stop is I just put a mandatory 5-point stop when you're trading a short-term pattern like that. And the reason for that is if you if you measure the last swing down to here, you'll see that there's your 127, your 1618. There's your 5 points is right above there. So actually 6 points this time. So that's what you'd be watching. So anyway, we're watching this as we go. I happen to be in this one, so I'm interested in what happens, but I'll let the market decide, what it really wants to do. Okay, now let's get back to the crude oil for just a second. This market's got a chance to run, folks. So here's what I'll be watching. And there's where we are. We've made a new high, okay? We've made a new high. My beepers tell me that. Hold on. Now, so we've got a nice run up here. So we've got a new high. We want to see the new 382. This is how they move this. Okay, now we're going to come down again, maybe to 7. That's only 10 points away. That's a piece of cake. I mean, that's somebody breathing hard. I'm going to put that beeper in right there. I'll buy it on that 382 with a stop below there. I'm only going to risk $300. But if it's right, these things have the tendency to run a buck at a time. Now, on the rally back, all this did was from the early morning high, it's still bearish because there's your early morning high. You went exactly to the 78% level, stopped right on it. So now we're going to find out when we get to this level if it's really got a chance to move or not. That's what we're trying to do, is to get your risk down to absolute smallest amount that you possibly can and still have a chance to make the market work in your favor, okay? Okay, now we're back up here. We got to take a look at the Russell here, folks, because this is the one that I'm watching the most closely today because I want to see how this puppy closes. We'll come down to the smaller time frame like I was watching before, and there's where we are. Remember this number? This is the breakout number. We came all the way down to 98. We're back up here again. So if the close is what's going to be important because there could be orders to buy on the close. And boy, if that's the case, you could be looking at 30 points higher in this, which would take you on that long-term weekly chart to 2347. That's what you could be watching. So that's it. This little pullback is, virtually nothing. Let's just measure it on a short-term scale. Yeah, see, it just goes to the 382, and the next one is almost the same. So it hasn't even backed off at all. So it still looks bullish. So what is important is the close, because if it can close above this really strongly at 2320, something like that, that means it's broken out of this long-term weekly level right here. There's 2320 right there, 2320. So if we close above that, who knows? Now, the others are not, the S&P is a long way from doing it, but it could do it easily for sure. It's only got another 40 handles in a run to make a new high. Looking at the NASDAQ, we'll take a quick look. Hasn't made the 382 on the day yet, folks, so we're going to watch that. See, it's still trying to do it. You make a new low. Okay, there's your 382. That's up another 40 handles in the NASDAQ. And then you'll notice if you just did the ABCD in the NASDAQ, there's your AB leg right here. There's your CD leg. And where's it going to take you to? right there at 2380. So there's the answer in the old NASDAQ. So it's going to be an interesting day, as they say in the trade. So we'll be right back. So live every day in an attitude of gratitude and stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this potential trade, okay, this is a Russell potential trade. Now, we had the big move here. You can see we finished the A, B, C, D to the upside. Okay, now here's the potential. We know this was the breakout. There was no new buying up here at 2306. Oh, we're at 2304. Backs off a little bit. That doesn't mean it can't go screaming higher. But here's what you've got. You've got 2 hours to go in the day. If this trade is good, then all of this buying that's up in here means you're going to be headed lower. So what should we want to be watching is you want to get it to be low. Let's just move it over. See where we are. This is the last yesterday. There's yesterday and there's today's. It's okay right in there. This is real simple. This is a real easy one, folks. Your 382 on this right here is at 2290. Okay. Now, if we go below 2290, then to me, everybody that bought this stuff, which is a lot of people, they're going to be underwater, and I don't think you'll have that high out. So what you're risking here is whatever that low is and that high right there. So that's going to be, risk is going to be under $700. on the Russell. But if it's right and you've caught a trap on some of these people, just take a look at this. Just watch it here, what it could possibly do. You could come there's where your fill would be. There's your old high. So you want to be below that. Just the 382 on this move right here. Just look what that would make you, folks. It would make a lot of money. It would be way down here. That's 30 handles. So that'd be 30 handle move versus a 15 handle risk. So that's a easy risk reward ratio. The key is 2290. There's your old high right there, 2290. You must go below that. That's why you put that in there to tell you, something's not right in River City. You'd like to see that in the last hour of trading or the last 2 hours of trading, and then we'll see it. We'll see if that's it. That's how I try to set it up for risk control, but sometimes it works, sometimes it doesn't. Just like everything else. So live every day in an attitude of gratitude, and may God bless, and I'll see you on the flip side tomorrow.